Bitcoin is not money yet. Kind of expected will happen. We just have to wait. Certain things will happen and then one day it can be money because fiat money is so bad. It turns out it's not an automatism. Bitcoin is a base money candidate. It's pretty good. I would say it's a perfect base money candidate, but it will be base money once you will have something on top of it, which is Bitcoin credit money.
Hubertus Hofkirchner is an Austrian school economist and entrepreneur, and the founder of BitCredit protocol, a Bitcoin-based credit layer for the real economy.
A former banker and telecom CEO, he builds finance ventures and hosts an Austrian economics meetup at Vienna's Hayek Institute.
The best base money has an absolute fixed supply. That's no Austrians would say otherwise. What Austrians have always said and which somehow got lost, Austrians have always said for the economy to work, for full employment, for production to function, the total money, quantity of money, or what we call money today, cannot be kept constant. It has to be elastic. What we call money today isn't really money. There is no money today in fiat. It's all just currency. It's all just credit, and worse, it's credit on credit, because national bank money is also just credit.
Hey guys, welcome back to Less Noise, More Signal, and welcome Hubertus to the show.
Hey Pascal, good to see you again. Hope you have been well since Prague.
Yes, everything's well on my side. Lots going on, obviously, but this is, I think, a fate of every Bitcoiner, so to say. There's just so many opportunities and also a lot of things which are left undone, and then you always have stuff to do. But I guess it's similar with you, right?
It's very busy. I think things are moving fast and they're moving in the right direction, so that's good.
Yes, exactly. And I surely want to talk about some of the things that you are moving in the right direction. So very interesting. Yeah, I mean, you just already said it. We met originally in Prague for the first time. That's where I got to talk to you. But I was following you online already a little longer, I would argue, because you struck me as one of the only people within Bitcoin who, besides maybe some academics like Lawrence White or George Selgin, have been talking about Bitcoin as money, but then also looking at it in different layers, and different forms of money. There's base money, credit money, currency, whatever. We can unpack it all. And that there is also the importance of an elastic credit layer to money, something which I think is vastly underappreciated in Bitcoin. And so this got me curious. This is stuff I've been studying for quite some time as well. And so this is why I wanted to bring you on. So very, very nice. Lots to discuss. But maybe before we get into the nitty-gritty of it all, maybe you can just introduce yourself and tell the audience who you are and why you are so interested in Bitcoin as well.
Okay, let's make it short though. So my main studies was economics besides finance and IT. So I studied that at the University of Economics in Vienna, in Innsbruck, and at some stage in Barcelona. I started my professional life essentially with Citibank in international banking, let's say in the euro-dollar system, which is very relevant here for our topic. Went on to become investment banker, specializing on IT, telecom, software, hardware. Yeah, founded my first company in 2000 and have been an entrepreneur ever since, so to say, a serial entrepreneur. Got interested in the early 10s in Bitcoin, just en passant, but more intensely 2013 till 2015. Dropped out of Bitcoin in 2015 because I was more interested in the practicalities of it, and it didn't seem very practical yet after the Greek disaster. And I don't know, sometimes when the bank bailout happened in 2022, I asked myself, okay, bailout, so has the thing which I was waiting for happened? Meanwhile, it hadn't. So I said, okay, if it hasn't happened, obviously somebody needs to do it. So that's when I kickstarted the BitCredit protocol project.
Yes, exactly. This is something I've seen online as well, this BitCredit protocol. I surely want to talk about this, but maybe first I want to take it to this more theoretical level, so to say. I mean, money, also within Bitcoin, but then abroad, like outside of Bitcoin, when you talk to normal people, when they hear money, all they picture is like the national currency, the money that they have in their pockets or maybe increasingly in their bank accounts, and they just swipe a card, and that's money to them. But I think to someone who has read Mises, and I think you studied it as well, money is a lot broader, because Mises, he was really adamant about also telling people that there's different forms of money, maybe even different levels of money. And so if you were so kind to unpack this from your side, how you understand it, this would certainly help. This could also kind of set the stage for the discussion, I guess.
It is a huge topic, so let's see whether we can make this rather short. And you are right. I think Mises had a very good model of money, which still stands the test of time. I also have to defend today's people. I mean, fiat money is such a perversion of money that it's really hard for everyday people who have to work with this stuff to understand what used to be behind it and what has been essentially taken away by the, let's say, corrupt practice of central banking today, where there is no money, nothing but what Mises would have called a money. Yeah, it's a currency, not a money, a currency out of thin air. All turtles all the way down, so to say. So that's today's money, and in reconstructing money or in constructing a monetary system for Bitcoin on the Bitcoin asset, I think we have to go back to the basics, which brings us roughly back to Mises's time.
Yes. So, I mean, I would think of Bitcoin, the Bitcoin that we have today on chain, the things that most people are still dealing with, if they deal with it at all, or at least what they're holding when they invest into Bitcoin. This is really something I would consider base money, right? It's like this really base layer thing that there is, but then there is not that much else on top of Bitcoin. You and others are arguing that something like credit money has to sort of be established on top of Bitcoin for Bitcoin to be sort of necessary and then also relevant in the real economy and for adoption to take place. Why is this the case? Can you make the case?
Yeah. And I guess when I say that will rise, however, immediate resistance. But I mean, it's a fact, and we just have to confront it and treat it openly. Bitcoin today, and you mentioned George Selgin before, and I'm not always parallel with him, but he correctly says that Bitcoin is not money yet, even though it has already a little bit of moneyness. But money for an economist is a generally accepted medium of exchange, and Bitcoin is not really generally accepted. It's accepted in many spaces, but it's not yet directly used for purchasing, buying, and selling. Usually you still need to exchange it against, unfortunately right now, a fiat money. So when we say base money, even base money, Bitcoin is not yet, because in order to be a base, you need already something on top of it. And that top of it is only being built right now as we speak. So at the moment, Bitcoin is a base money candidate. It's pretty good. I would say it's a perfect base money candidate, but it will be base money once you will have something on top of it, which is Bitcoin credit money.
Imagine lowering your tax bill while stacking Bitcoin. With Blockware, you can. Thanks to new tax guidelines, you can write off 100% of your mining hardware costs in a single year. Blockware's mining as a service takes care of everything, so you can start mining Bitcoin effortlessly. Visit mining.blockwaresolutions.com/LNMS and get $100 off for your first miner. Mm-hmm. And why is it important to have this credit money on top of Bitcoin? Why is as it being a base money candidate, why isn't that just enough,
Yeah. So I mentioned already that I became aware that Bitcoin is not enough in 2015. And the debate within Bitcoin was very different at the time. We kind of expected, it will happen. We just have to wait. Certain things will happen, and then one day it can be money, because fiat money is so bad. Every Bitcoiner knows why fiat money is bad, so we don't need to go much into detail here. But It turns out it's not an automatism. There's pretty hard work to be done to make a monetary commodity, a possible money, into a monetary system, because that's what money is. Money is a system. Without the system, a money is just a commodity. That's true for gold. Or without a monetary system, even air is nothing, because the fiat system converts air, so to say, thin air, into money. Why do we need it? We've seen it already in 2015 when Greece couldn't swap over to Bitcoin. And really what made it extremely clear was 2021 when Bitcoin became legal tender in El Salvador, and Bitcoin had its highest price ever there in real terms. Yeah, Bitcoin hasn't been as expensive since 2021. It's probably down right now 20-25%. When I look at it in a real value, let's say gold, you needed 40 gold coins to buy a Bitcoin at the peak of the 2021s. Today, you only need 30 gold coins, so that's a decline of 25%. And I completely ignore dollar numbers. They're completely irrelevant to me when I look at the value of Bitcoin. I just ignore them. So why is that? So we all thought, okay, now it's legal tender. There's no problem anymore. The tax situation in El Salvador is kind of okay. But it still didn't work. Why does it not work? Because trade and industry, the real economy, production and consumption, does not run on base money. It runs on this layer which we still don't have, which is M1 money, credit money, which is denominated in Bitcoin. Used to be denominated in gold. So people did not run around with gold coins to buy and sell all the time. They used banknotes, which were either issued against gold, some against goods and services, so against value, which was still true, and some, unfortunately, already issued against thin air. Because in the banking system, we probably can talk a little bit about banking after, but if you give too much responsibility for money issuance to banks, things can go very, very bad.
Yeah, it's interesting. I mean, that you mentioned 2013 to 2015, like the early times, when you said that like people were just sort of the belief that, okay, Bitcoin, it will just turn into money at some point, just give it time, lean back, reality will do its thing. I mean, now that it's 10 years later and it still hasn't happened. The thing which sort of puzzles me, and to the point where it's almost disappointing, is that when I talk to Bitcoiners today, most of them are still of this belief. They still believe, I mean, it just takes another 10 years, just give it more time. And they're sort of always trying to project something into the future, which might never happen just because of the theoretical underpinning that is not given in terms of there is not this elastic credit money layer, So this is something I find rather perplexing. But then what do you say to these common arguments, by Bitcoiners that some maybe point out that, we can just simply divide the fixed stock into smaller units, this would allow for more transactions. And so, it's just the adoption isn't here because it's not here yet, but it's not because of some technical economical reason.
I think I've actually traced where this perplexing, strange belief comes from. It's actually from a book of Saifedean Ammous, which otherwise is quite a good book. But the man at some stage actually wrote exactly that, which is very surprising because he's otherwise quite astute in what he writes. And maybe it has been misinterpreted. I've never listened much to the guy. But it is, of course, part true and but not true. It is true, and Austrians have always said that any quantity of money is enough to build a monetary system. And with system, I mean a monetary layer, a money layer, base money, M0, as we say in economics, and the credit money layer on top of it, the M1 money, the money which is needed for trade and industry, which is needed so that people can earn Bitcoin and spend Bitcoin in a circular fashion without switching back to fiat, and then the economy the production runs on fiat, and then people earn fiat and they exchange to Bitcoin, and then they go to a merchant, pay in Bitcoin, merchant converts in fiat so can get into production. So that's madness. That's sheer friction. So for that recipe doesn't work. The divisibility is only there to show that you can express the natural value of a money irrespective of what it is. So it doesn't matter if we have 288,000 tons of gold in the world, or whether we have 21 million of Bitcoin or how many quadrillion of Bitcoin. It just means that the fundamental value, which is in the monetary good, in the monetary commodity, can always be just needs to be divided in the right fraction. What's not being handled, that's divisibility. What's not being handled by divisibility is elasticity. This is the stuff which is needed for production. This is credit money. Production needs credit. A company needs to buy goods which have already been produced, which have already seen proof of work. It needs to put more work into it until it can sell to the consumer. So this whole matter of production, and Friedrich Hayek had a very good essay on that called Production and Prices, where he really explains in detail how it is the ever-increasing specialization, modernization, modern world, our wealth, our division of labor, the fantastic specialization which we have nowadays enables that, but it also needs more money to make sure that this production and supply chains can keep on moving goods along the production chain. So if you don't have that credit money layer, that thing dies down.
Yeah, I mean, from what I'm hearing when I listen to you, you just said it yourself, and even Austrians would agree that when we now talk again about the base money layer, it doesn't necessarily have to be flexible. We're okay with a fixed money supply on the base layer, The thing is just like, if you then want to build some sort of real economy around it with production, which is sort of ebb and flows, with demand, how things go in the real world, there you need some sort of elasticity layer, as you just explained, to kind of address the liquidity needs of production also. I think that is what you're telling me. So, I mean, the other argument that then some people make, some Bitcoiners like Parker Lewis, where they say a fixed money supply is perfectly elastic. With fixed supply, it's just the price, which is elastic. But then this doesn't add up again, because that's exactly what we're seeing, that if you want to be sort of an entrepreneur and you want to have your prices in Bitcoin and you have all your books in Bitcoin as well, and prices are elastic in the sense that they are volatile, going up and down, it's really hard to run a business on top of this, right? And so this argument doesn't cut it either.
No, in effect, it's, sorry to say it, it's pretty much very much a misunderstanding of what we are talking about. What he's saying, if I understand him correctly, I read his essay on that. Yeah, of course, if you have a supply curve, the higher the price of something goes, the more of it will be produced, which is not true for Bitcoin, because we have the difficulty adjustment. And the difficulty adjustment was important because Satoshi did something which is absolutely correct. The best base money has an absolute fixed supply. That's, no Austrians would say otherwise. What Austrians have always said, and which somehow got lost, and nobody who has a voice in the space has mentioned that much. Austrians have always said, for the economy to work, for full employment, for production to function, the total quantity of money, or what we call money today, cannot be kept constant. It has to be elastic. Hayek said that in denationalization of money explicitly. So that's why it's so strange that nobody picked up on that. Mises said it in the Theory of Money and Credit much earlier than Hayek. He also said that the banks' role, and here we could discuss a little bit. The banks issue money to supply essentially the economy money, which is what keeps the value, the objective exchange value of money, as he said it, constant, meaning the purchasing power. So the principle is, you have a money, and at that time, what they called money was essentially gold coin. The stuff on top, the credit money, was called currency. And the problem, which all the Austrians have always criticized, and so to say, I also run the monthly Austrian Economics Salon here in Vienna at the Hayek Institute. So this has been a source of perplexity in our discussions, how this strange narrative about, it just needs a fixed money, how that came around. But of course, the explanation is what we call money today isn't really money. there is no money today in fiat. It's all just currency. It's all just credit, and worse, it's credit on credit, because national bank money is also just credit. It's essentially more than 90% government bonds these days. Yeah, there is a little bit of gold on the balance sheet, but it's minuscule. So when we talk about Parker Lewis' interpretation, he is completely, not only theoretically provably wrong, it's also wrong if you look at the reality. I'll give you one example. When Britain tried to reintroduce the gold standard after the First World War, when the gold standard was suspended in 1914, I think about 10 years later, 2020, said, okay, we want to go back on the gold standard. Now, they did a very stupid political mistake, as politicians tend to be, which is they insisted on having the pre-war parity of gold to the pound. Okay, you're obviously aware of that. And so to say, which was a matter of interest, of course, yeah, because if they had taken the daily, the value of the day, then those people who had, so to say, money in the old terms would have lost money. But I mean, that's what it is. You cannot break economic laws, or not for long. And so they tried that, but had to abandon after a while. Why? Because exactly that happened. Why you need an elastic money layer. If you don't have it, you need to raise the interest rates. The supply of the economy's credit money is reduced. Production is reduced.
Deflation.
Deflation, which is greatly misunderstood in Bitcoin. Bitcoiners do not have the nuance between falling prices because of productivity and falling prices because of manipulation in the monetary system, which is what the British did in 1925 to 1930. So they manipulated the monetary system. They tried the artificial currency at a completely wrong, at much too high a relation to gold. And of course, that can't work. And the difference was so large that they had to abandon the attempt. And that was the last attempt to reintroduce gold, which we've seen 100 years ago.
Discover the power of self-custody with Bitbox, the hardware wallet that combines privacy, precision, and world-class security. Whether you are a beginner or an advanced user, Bitbox offers user-friendly features and advanced options like coin control or optional passphrases. I have personally been using them for years, and so should you. Visit bitbox.swiss.lnms and get 5% off your first order. I mean, that was very well explained, because that was the hideous thing, that they then blamed this on gold not working in the aftermath, but if you, as you just explained, if you understand it correctly, it was really this fixing to the pre-war parity, which didn't work after the war anymore, because there was so much more money floating around because of the war. So they should have kind of adjusted for this. And that's why, because they didn't do it, and they tried to sort of be above the laws of economics. I think there's this book by Eugen von Böhm-Bawerk where he says, the economic law is always trumping sort of political reality. This is really the case. And so I think it wasn't the gold standard's fault. It was really messing around with it by the politicians, right? After all.
And it's always, it's the politicians. They will blame anybody for whatever bullshit they do on inflation and deflation. We know that they blame inflation on anybody, right? They never blame inflation on the guys who print money, which is their political central bank, their monopoly bank, the money printing kolkhoz in Soviet style. No, they always blame, they blame the businessmen because they want to do a profit. They blame the greedy businessmen. They blame the greedy workers because they want to have higher wages after inflation. They blame the supermarkets because they have to raise their prices. They blame anybody. They blame Beyoncé because she increased her concert tickets in Sweden. So they'll blame anybody but the politician. It was exactly the same with the politicians when they did this failed reinstitution of the gold standard in Britain. They blamed gold. Yeah, gold is such a bad idea. And it wasn't the parity they took. They blamed the bankers. Yeah, they blamed everybody. They just didn't blame the politicians.
That's a great point. Yeah, for sure. I want to come back to the credit money, because maybe just to drive home the point that you made, I think with Bitcoin, this ingenious sort of difficulty adjustment, it's as ingenious as it is, it really creates this supply curve, which is vertical, if we talk in economics parlance. And this has the impact of demand. Like when it shifts, it's entirely impacted on price and not on quantity at all, and in that respect, to me at least, it feels like purchasing power volatility is baked into Bitcoin's base layer design, and that's why I guess we need this credit money layer, to maybe absorb and smoothen some of this volatility. But then if I want to now direct this to credit money, the discussion, what is Bitcoin credit money? Like, can we be more specific? Is it a new token on top of Bitcoin? How can we make it tangible for people to understand?
It's not a new token. It's actually quite simple in reality. Today we have cryptographic technology, and I think let's just look at the old technology to understand it. The old technology obviously was paper. Paper has a very bad word in Bitcoin, because it can be abused to produce money out of thin air. But it can be also done correctly. You can't blame paper for something which somebody else does wrong, right? Toast, or whatever. Guns don't kill people, people kill people. So people can abuse paper, or people can use paper correctly. When an honest goldsmith issued a gold note saying, okay, I'm 1 ounce of gold coin, and people pay with it, and there is a gold coin in the vault of the goldsmith, all is fine. If credit money is issued where an honest businessman pays for real goods which have been produced, proof of work, with a bill of exchange against value, that's honest money. It's not against thin air. So that's the old technology. The old technology is you had gold coin and you had banknotes. And the banknotes was the stuff that the symbol money, the token money, it was actually a name at the time, which circulated in the economy where people got paid in, which used to be called the wage fund. Workers did not get gold coins. They got banknotes and token money. Copper, whatever, for the works. And that's what circulated. That's what they spent on their rent. That's what they paid their groceries with. That's the circulating money in production and consumption. The gold money was essentially the store of value. And it still is. Bitcoin is essentially a store of value, but it is the monetary institutions which produce the credit money, which turn the commodity Bitcoin into a base money Bitcoin. That's important to understand, to always differentiate really, really sharply between the potentiality of Bitcoin and the actuality of Bitcoin. Now, as you said correctly, since we have this perfectly inelastic supply of Bitcoin, yes, any change in demand will cause a strong change in the price of money, which of course is not desirable. Any Austrian economist whom you ask will tell you it's important for a company to have a stable purchasing power. And when we say that, we really mean the money. We don't mean that some goods may become cheaper because chips are getting faster, because, I don't know, that there's AI and production. That's productivity. It's an entirely different thing than keeping the actual value or objective exchange value of money the same. Both, of course, could mean that the prices fall or rise, but still, it always hurts me when people talk about inflation or deflation when it's just about production cost rather than somebody manipulating the money. When I say deflation or inflation, I strictly only mean due to a manipulation of some sorts of money, not of something improving in the production of other goods. So, long story short, what changes once you have a money is that the supply of money reacts perfectly to the demand for money in the economy, in production. And the price which changes is the price of money, which is not the exchange rate of money. It's the price of money. And the price of money is the so-called discount rate. So when the demand for money in the economy rises, the producers of money will increase the price of money, which is the discount rate. It rises. And if the demand for money slows down because there's not much happening in the production supply chain, I don't know, over Christmas, then the price of money, which is the discount rate, falls. So that's what falls, and the value of the base money stays perfectly the same, pretty much perfectly the same, unnoticeably. So that's the difference between a monetary system and just a commodity money. Commodity money, the exchange value of money changes. In a monetary system, it's the price of money which changes.
Hey guys, I'm thrilled to share my new book, The Bitcoin Enlightenment, co-authored with Mexican billionaire Ricardo Salinas. Make sure you grab your copy now and learn about how one of the richest people in all of Latin America thinks about Bitcoin. You'll find the link in the show notes. Can we maybe concretize this a little more? I mean, especially discount rate. I think this is not something people are still sort of familiar with today, what it actually means. And also you explained it, but then how would this look in practice? Like how would it really bring down volatility or provide a stable purchasing power for Bitcoin? Because what are people holding then if they have credit money, or like how would that work? Because I think this is still something people cannot really wrap their head around, including me, like how this would look in practice,
That's actually the thing which is so surprisingly simple. Once you have token money, symbolic money, not the gold, and you produce the exact amount of money of goods which are in the supply chain as medium of exchange. So then the banknote looks exactly the same. You couldn't distinguish a banknote which was issued against gold from a banknote which was issued against a bill of exchange which paid for real goods, real proof of work. And unfortunately, you also couldn't distinguish it from a banknote produced against thin air, such as government bonds or war bonds or whatever financial air, where nothing went into the supply chain. So you couldn't distinguish those banknotes. The only thing is, in the future Bitcoin system, we must educate Bitcoiners to be hopefully as toxic against Bitcoin token money out of thin air as we are today against anything which is not Bitcoin, while allowing token money for the production and supply when it's backed by real goods in the supply chain, 100% full reserve.
But it's a good point. But this then means that if I play this through now, that there is Bitcoin, which is on chain. And then if the demand of money rises because of whatever is happening in the real world, because due to some production, which needs to be increased, then somebody would issue Bitcoin token money against that Bitcoin which is on chain,
The buyer would do that, yes, if the seller agrees.
Okay. And because that would be interesting now to kind of understand architecture wise, can we sketch out what this Bitcoin based economy with this elastic credit layer would look like? What are the moving parts like?
Yeah. So what's happening, and again here we must be extremely attentive because nuance matters a lot here. So when I'm a producer of something, let's say a producer of cotton, and somebody wants to buy that cotton to produce yarn, and somebody else wants to buy yarn to produce cloth, and somebody else wants to buy the cotton, the cloth to produce t-shirts or shirts or whatever. Yeah. So let's take this primitive supply chain. Clearly, once the cotton is produced, the farmer has already done proof of work. Yeah, he's planted, he has sweated, he has weeded his thing, he has harvested. Yeah, lots of work has been done. So the guy, when he sells it, needs to be able to buy other goods. Yeah, to pay his workers, to pay his suppliers. So what happens if you don't have a credit money layer is he could say, okay, dear yarn manufacturer, you only pay me in 3 months. And here's the problem. If you do that, then surely but slowly, the economy grinds to a halt. Because at some stage, the credit which everybody has with everybody else is so high that everybody is scared of somebody defaulting and causing a chain reaction of defaults. The system stops to a halt. This is absolutely unnecessary. And there's this beautiful scene in a movie called Shillings from Heaven, das Wunder von Wörgl, where a German tourist comes into a hotel in the Tyrolean city of Wörgl and puts a 100 shilling note down at the counter. You're smiling. You must know that scene, yeah? And walks up to have a look at the room, and the hotel owner goes to, I don't know, the grocery store and pays his debt. Yeah, and the grocery store goes to the publican, to the pub, and pays his debt, and the publican goes to the butcher and pays his debt, and the butcher goes to the beauty of the village and pays his debt, and the beauty of the village, who regularly rents hotel rooms, goes to the hotel room, puts back the 100 shilling, and then the guest from Germany, the tourist, comes down and says he doesn't like the room, takes the 100 shillings and goes away. Yeah, credit money, poof, goes away. But all of a sudden, the whole village is not indebted anymore, which was the miracle. Yeah, and it's not really a miracle if you understand credit money. Credit money simply reduces the exposure to credit risk which everybody has. Completely unnecessary credit risk, because work had been done. Even in that village, everybody had done their work already before. The butcher had worked, the publican had worked, the beautiful lady had done their work, whatever. So, So that's why economy breaks down rather soon when the credit money supply stops. No political government has ever survived a period of monetary deflation for more than a couple of years. The British were pretty good suffering from 1925 to 1930 or something, but even they didn't make it. Hayek once said, had they just done it for 1 or 2 more years, they would have reached the fundamental value of gold again, and they would have been fine. Yeah. But they stopped it because the political pressure was too much. Industry was dying, people were starving, people were out of jobs, unemployment. Monetary deflation, you don't want to see.
Yes, no, exactly. I mean, when I want to make this comparison, you said there in the old system, so to say, that we have from history, there was gold. I think there's the bill of exchange that you mentioned, and there's the banknote, and they all together formed this sort of system that used to work. And now in a Bitcoin economy, gold is Bitcoin, so to say, BTC. Then what is the bill of exchange? And then also, what is the banknote? Is that the Bitcoin token money that is issued? And then by whom is it issued? And yeah, that would be interesting to understand.
So first of all, the bill of exchange pretty much died over the past 40 years because the law was ancient. It had worked perfectly fine for 500 years. But then the fiat people, so to say, changed the central banking law. Derek, that is a monopolistic fiat money monster, which is issued against thin air by intention. It's issued against government bonds mostly, very little against gold. And so it's not possible to use the bill of exchange anymore in its honest way in paying for money, because there's no way to refinance it. Because the politicians got monopoly on money, and nobody is allowed to produce money in the proper way, for which the electronic bill of exchange is the raw material. Now, nicely enough, here in Vienna in 2017, 8 years ago, there was a United Nations model law for electronic bills of exchange, electronic trade documents passed, which now gives us this possibility. So what has been now built for the Bitcoin ecosystem is a new protocol called e-bills, BitCredit e-bills, which allows the issuance of electronic bills of exchange, peer-to-peer, decentralized, between businesses. So if a business wants to pay another business with a bill of exchange, they can. We're hosting the alpha version currently on the URL bitcredit.minibill.tech, TECH, 4 letters. Anybody can try already alpha. We're still doing some things with it. That's, so to say, the reference installation of the raw material for credit money in a Bitcoin ecosystem. And the productive companies, decentralized, free market-based, no monopoly needed, to take this raw material of the bill of exchange and produce Bitcoin, honest Bitcoin credit money, which is fungible, divisible, private, and instantly payable and infinitely scalable. Those are the so-called Bitcoin credit mints, which we call Wildcats. Wildcats,
Yeah, exactly. Because if I understand it correctly, and if memory serves, in the traditional bills of exchange system, it was then the banks who issued bank money on top of these bills of exchange sometimes, And I guess here the question would be, would we then also have Bitcoin-powered banks, so to say, who issue Bitcoin token money on top of these e-bills that are circulating in the real economy? Or isn't it really banks? It's Wildcats. Yeah, maybe you can flesh this out for us as well. Where are sort of the similarities, but then also where are the differences?
I mean, first of all, any money creation by banks is bad, is wrong. Any money creation by banks is wrong, be it central banks or normal banks. And in the fiat system, it's exactly what they're doing. It's one big wrong. A bank must not be allowed to issue money. No bank, no single bank. But that used to be the status because people didn't understand the economics. The only actors which are allowed to create credit money, raw credit money, but credit money, is the producers and the B2B companies in the production and supply chain. So when a business buyer buys goods which remain in the supply chain and pays with a bill of exchange, the producer actually essentially gives them a credit, and this is the stuff which can make honest credit money. It's not yet fungible, it's not yet divisible, it's still the risk of one supplier, but it's good. It's the good and the honest raw material because there is value entering into the system. There is something to be exchanged, so you need media of exchange. Now, it is already the case that you can pay others with a bill of exchange. Yeah, if my customer pays me as a business with a bill of exchange as a cotton farmer, and I take this bill of exchange and go to a, let's say, tractor manufacturer of agricultural machines and say, okay, I'll pay that machine with the bill of exchange. And that guy is happy because it has two signatures on it, two good signatures who are liable to pay if something goes wrong. Perfect. So the bill of exchange is already a raw form of money. And so the only thing what Wildcats do, which is very different from what banks can do, is to fractionalize this same bill of exchange into Satoshi-sized pieces and keep a little minting fee, which is pretty much the same as a discount rate. A minting fee because they have costs to do that. They need to do, due diligence, credit risk checks, and there will be defaults. Yeah, so there needs to be a profit, obviously. So that's why they keep back a little bit, but the rest of the fractionalized bill of exchange goes back to the original holder, the supplier who sold goods, who created good of works, and he can pay that. And at some stage in 2023, we decided that the best representation for that is eCash, a new form of Xiaomi eCash, which so to say a second problem we have to solve because Xiaomi eCash right now only exists in custodial form, and that would never fly in the political system. So the last outstanding job which we have here is to make non-custodial Xiaomi eCash so that the whole system stays decentralized without ever anybody having custody, because otherwise you're in banking law, which means you're back in the clutches of the politicians.
But coming back to banks real quick, why would you say is this problematic? If banks issue their banknotes and that way create money, because if they were be doing it against maybe bills of exchange, which are then sort of founded in real economic production, wouldn't that be okay if they issued money against these type of instruments? Or why did you say banks creating money is always a wrong in your view?
I mean, you are correct. If banks did that, if they only issued a banknotes against bill of exchange, absolutely fine. But again, we should never think about economics and money without taking into consideration the bad guys, the politicians. As soon as the banks, so to say, issue money, and I can prove that from history, they will think, now I want to do this war or on whatever, on another country, on COVID or whatever bullshit. And then they go to the bank and say, oh, now I need some money. Don't only take bills of exchange. Please take my war bond, issue money against it. And the bankers will say, oh, but that's air. That's out of thin air. We can't do that. That means there will be a loss. And the politicians say, no, you do that or I'll take away your license. So no, as soon as the politicians, you give them even 1 millimeter, they will take the whole hand. They will eat you alive.
Yes, I see. And this wouldn't be the same in Bitcoin because the Wildcats that you mentioned aren't really banks. What are they if they're not banks? Like, is it just code and anybody can sort of run a Wildcat, which is eventually some sort of node structure? Or help me understand this as well.
Yeah, exactly. Each Wildcat is a node. It's a piece of software which does nothing in competition with other Wildcats, but fractionalize bills of exchange, which they checked whether they're honest. So there is work involved, but essentially they just fractionalize them for the holder and give them back fungible bits, divisible. They're divided down to the single Satoshi. Obviously private, because Charmian eCash is private. It's very important for money to be private if it has to be fungible, because if it's not fungible and not private, it can be censored by, again, the politicians. Yeah, also the every Satoshi of credit such created fractionalized e-bill is still connected to the original bill of exchange. So as a Bitcoiner, you can check that there's no war bond behind it, but it's a true bill of exchange.
Just to make sure I understand this again, there's an e-bill, issued by the producer and agreed upon by its counterparty. And then you have these Wildcats, which mint Bitcoin denominated credit against these e-bills. And in that sense, it's fractionalized, or
they fractionalize the e-bill. Yeah, it's still the e-bill, but logically it's still the e-bill. But every little Satoshi of it can be sent to somebody else in the same 10 milliseconds anywhere in the world.
I'm just trying to understand, where does the Bitcoin credit money come in here? Is it the e-bill itself, or is there because we were mentioning
the e-bill? It's the e-bill. Yeah,
the e-bill itself.
Credit. Yeah, so it's just, imagine like a gold lump as the raw material for a gold coin, and then you bring the gold lump to the mint, and it gives you back shiny little gold coins. That's what the mint does. You give it a bill of exchange, which is, so to say, the gold lump, and to divide it, they make it secure because there's a decentralized lender of last resort behind every mint, which is the other mints. Yeah, so it's perfectly secure, and the perfectly secure claim to money is what? That's currency. Yeah, so you have money, which is Bitcoin, and you have currency, which is needed for trade and industry. Currency or trade money. So the credit is still the bill of exchange.
And so there's Bitcoin, there's the e-bill, there's even fractionalized e-bills, but then we don't have the need for a banknote in the traditional sense anymore.
No,
that's not something that we need.
Yeah, exactly. And that's, so to say, the misunderstanding. I mean, I know how that can happen. You're a person, there's this bank, they produce banknotes, the bills of exchange could be somewhere, there could be none, there could be a gold coin, there could be a war bond. You wouldn't know.
Yeah.
But now with cryptographic technology, we know exactly. Everything is verifiable.
And then is there still a need for this discounting? Because you mentioned it just a couple of minutes before, the discounting, that was something done, I think, usually by banks also under the traditional e-bills or bills of exchange system. Now, do we still have discounting in this Bitcoin-based credit money system, or it's not something we need anymore because we don't have these banks anymore?
Yeah, I was telling it as an analogy because you asked me, how can I imagine this? And that's so I had to go back into history to give you a simile. But no, now it's really this fractionalization of the bill of exchange to make it fungible and divisible and secure. So that's what it is now. So it's not banking in the sense that anybody has custody of anything. No custody anymore. Custody is when the politicians come in.
So in that sense, I have this one question which I prepared here, the BitCredit protocol, because everything that you're now explaining is operated through this BitCredit protocol. And then I had this question, isn't it an attempt to revive free banking on Bitcoin? But if I understand it correctly, it somewhat sort of is, but at the same time it's not, because there aren't any banks anymore.
Yeah, I mean, it's the same in the same way as a Tesla is not a horse carriage, right?
Yes, okay, I see. And so, because with free banking, there was a lot of criticism. Banks exactly. They would be issuing like IOUs, which would not be legal, or maybe they would overissue. And these are all problems which don't exist with the Wildcat mints anymore, because it's everything cryptographically secured, and you can always check one-to-one if it's actually backed by something. Or how do we avoid that Wildcats sort of overmint or overissue, these fractionalized e-bills? Or how do we avoid that e-bills are not overissued in that sense?
No, that's actually a very important point, Pascal, because if we don't take care to do that properly, again, the politicians will enter the ring and do their nice thing. So here we need to be extremely careful. George Selgin is let's say the biggest authority on free banking, I would say. I mean, yes, Lawrence, White and things, but that's his Selgin, yeah? And so when we talk about the criticism of the free banking system, there's really two things to consider. The first, and by far the biggest problem, is politician intervention. Politicians made stupid laws, different stupidities in different countries, which of course means that the free banking systems in different countries had very different results. It's very well known that the one in New England had a very bad result because the politicians ordained that country banks, those farmers which the lawmakers despised, the people working, I guess, they were only allowed to have one branch, which meant that if there was money required in the countryside after harvest, for instance, there wouldn't be any money. And so there was constant shortage of money. Other countries didn't have that. Canada didn't have that. I take this now from George's book. Canada didn't have it. They had branch banking. So if the branch in Toronto had a lot of money and it was needed somewhere in a country town, I don't know, Edmonton, because they had harvest, they would send it there. No problem. That reduces the money demand. It economizes the use of money. So as I said, I would say the vast majority, I would say 95% of problems in free banking was created by the politicians. And then, of course, there was the Achilles heel of fraudsters. Certainly there were some banks which overissued. Maybe they had a bad business policy and to try to survive by printing money out of thin air, and people wouldn't know. If I look at a banknote printed by bank ABC, I don't know if they have the gold in their vault or the bills of exchange behind it, or if it's just a bank war bond, or even worse, nothing. So which is just the same as a war bond. Anyway, so there were these people, be it outright fraudsters or people, so to say, who turned to fraud because of their despair. And the politicians used that to essentially kill free banking, to centralize everything in New York. And that's what ultimately led to the downfall of free banking. Now, the good thing is we don't need banking, as I said. We just need fractionalization with perfect proof for everything. But it just means that we need kind of watchtowers in Bitcoin, which is all the mints watching each other. That no bad bills of exchange enter the system.
Yeah, because I was just going to say, we ultimately deal with humans after all. And I guess theoretically speaking, technically speaking, it would still be possible, for people to issue fraudulent e-bills. But then it would come down to the market itself, maybe as you just explained with watchtower sort of infrastructure, that they watch each other and call out bad actors. And maybe because you can do everything through digital means, which everything travels at the speed of light, information travels a lot faster. This sort of adverse clearing, where you also then kind of weed out the bad actors, could very efficiently happen in a system like this. And then you would also have at some point this cryptographically proofs that you mentioned, which could help along the way just to make things stronger in that sense, right? That's probably how it would differentiate from an older system where things have not been digitized yet.
You're essentially describing now, you so to say, are guessing right now exactly what is being released as the Wildcat Mint network, which we're going to launch towards the end of November, beginning of December. Yes.
Yeah,
With
because
the
I was
first
gonna.
mint in Zug near you.
Okay, interesting. Yeah, so I'll definitely have to check it out. But because I was just wondering, where are we on this process? Because as you see, I have studied this stuff for quite some time myself. I still have a hard time theoretically wrap my head around, but in the end, I guess it comes down to people actually using this, and then things will just start picking up, and maybe in 5-10 years time we will look back and everything will seem so logical, because once you actually use it, it becomes more tangible. So where are we? How can people use something like this? Where is BitCredit protocol? And yeah, can you fill us in here as well?
Yeah, the project fortunately has a lot of friends, people who want to make sure that Bitcoin becomes money, that this horrible fiat system finally ends after 100 years of nonsense. So yeah, we have some good friends helping us along, and so there is already the raw version of a free open source e-bill system available. It is the first such system. So far, there have been a couple of attempts of making an electronic bill of exchange, but they're all by commercial suppliers who are not interoperable. The banks are hesitant to adopt it because, what if other systems, how do I make it? Anyway, it's a free open source thing, can get going on it within seconds. You don't even need to download anything from an app store. So it can't be blocked by anybody. You just enter this URL, bitcredit.minibill.tech, and you can issue to your suppliers, or your buyers can issue to your suppliers bills of exchange, or the suppliers can draw bills of exchange on their buyers. And they already have the options to, for instance, sell the bill of exchange if it's denominated in Bitcoin against Bitcoin. So this will be a possibility for the guys like Bitcoin treasury companies to earn a yield on the Bitcoin. Yeah. I think you did I saw a comment you made the other day. Yeah.
Yeah,
Yeah.
I was going to ask, like, could the Bitcoin treasury adoption and this institutionalization that we're seeing here, could this further your cause as well? And maybe if you can just quickly explain, how could they help, and how could they work with the BitCredit protocol? How could they adopt it, so to say?
Yeah. No, I think they kind of already know that. So I've heard some Bitcoin treasury company CEOs say that they're looking at banking and types of things, and that's kind of the right path. Except that in Bitcoin, hopefully, we don't have any money issuance through banking, because all money issuance by banking is wrong. So yeah, what can they do? First of all, they can earn yield on bills of exchange if they start putting bills of exchange into their portfolio. Obviously, they have to do their own credit checks on that, but they have the advantage of having several signatures on bills of exchange before it's their turn, so their credit risk goes down every stage. Do I explain that? Do I need to explain that? Well,
Yeah, that
let's
would probably
explain it.
be good.
Yeah. So what you need to know is that in the old days, let's say in the 1800s, bills of exchange were medium of exchange. That's where the name comes from. So one merchant used to pay the t-shirt manufacturer, used to pay the cloth manufacturer with a bill of exchange. He paid with the same bill of exchange the yarn manufacturer. Yeah. So it circulated just like money, but it was called wholesale money because it was used in large sums, non-fungible, in between businesses. Because of the law of bills of exchange, which says that if I'm being paid by somebody with a bill of exchange who was paid by somebody with the same bill of exchange who was paid by somebody, and the final payer doesn't pay, I'm allowed to go back to the person who gave it to me and said, that person didn't pay. You give me the money. Yeah. And that was a very strong anti-fragile stability mechanism in the old days. Yeah, so just because somebody went bankrupt, it didn't mean that, like the same in the fiat banking system. In the fiat banking system, if one bank fails, even the number 13 bank, like in end of 2022, which woke me up again, the whole system is in danger. Yeah, they need bailouts. They need to be saved at great cost to the society, or everything breaks down. If a supply in a bill of exchange breaks down, it's can be gracefully digested. Yeah, it goes back in the chain. Somebody will have a loss, but it won't endanger the system. So now you gotta help me. I lost the thread. Treasuries.
The treasuries, I mean, because one thing that I still kind of try to picture myself and try to understand is, where do the Bitcoins come in that the treasury holds, because as I understand, they would issue e-bills against real goods, with producers out there, and they don't really need the Bitcoins for this. So where's the connection there?
Here's the thing. There's two types of money in the economy, in a full monetary system, which all fulfill the same function. M0, gold, Bitcoin. M1, credit money, honest on gold, honest on Bitcoin, or the fake stuff. And both can help the merchant to pay his workers, to pay his suppliers, to pay his rent. So if I'm a company and I have a cash pile and I need to buy something, I pay with the money. If I don't have the money, I pay with a bill of exchange, which means I can still sell my goods, which would otherwise spoil at great cost to the society. Yeah, so I can sell them because I get a bill of exchange. And what I can do now is I can either sell the bill of exchange to get back to liquidity for it so I can pay my workers, or I can mint it. So if there is liquidity at a certain interest rate, it's an interest rate, not a discount rate. So if I can borrow money, as I can sell the bill of exchange to somebody to get Bitcoin, I can pay my workers. Or if I go to a Wildcat mint and say, okay, please give me the little Satoshis against the minting fee, then I can pay my workers. Both will charge something. In one case, it's so to say the discount rate. The other one is also a discount rate. But there's never a restriction in fractionalizing bills of exchange issued against real goods. So there's never the possibility that somebody has goods and cannot sell them, like in England in 1925, or during the bullion famine in Europe in 1465. People have stuff, but they can't sell it because there's no liquidity. People had cows dying on the fields without milking because there was no work hands, because they couldn't be paid, because there was scarcity of bullion in Europe in 1465.
Okay, then the way I understand it, it's not necessarily that Bitcoin treasury companies would start issuing e-bills. Again, this would be the producers, but then the producers, obviously, they maybe issue with their suppliers. They have these e-bills, but then again, these e-bills, they're not bang for the buck, so to say. Maybe not just yet. They're not the final money, not the base money. And maybe some of their workers want to be paid in base money. And there you could go and try to liquefy sort of your e-bill for Bitcoin. And this is where a treasury company could be coming in. Like
two roles.
Yes.
Either, and that's going to be in the first year or two, they just, so to say, buy bills at a profit, obviously, so that the supplier, the producer, can pay their workers. The other thing which would be very interesting for a treasury company is to simply become a mint. Yeah? To use the liquidity to settle bills of exchange between merchants, and so that the merchants would always run the bill of exchange businesses through the mints. That's how it actually used to be the case. Yeah, like if there was a producer, let's say, of steaks in Argentina. Yeah, and the steaks were being sold into, I don't know, Switzerland, Austria, Germany. Yeah, and the Austrian importer or the Swiss importer paid with a bill of exchange in 3 months to the Argentinian steak manufacturer. What would happen is that the bill would be made out on London. So in the end, it would be the buyer in Switzerland or in Austria would instruct his London banker to pay the bank of the Argentinian exporter the amount of gold which was needed. So one banker would cross the street, Lombard Street, with a little heap of gold coins and give enough gold coins so that and so it all settled in London, till, of course, the Bank of England, in its privilege of banknote issuance, changed the matters over time.
And the difference between Wildcats and Mint, is it the same?
Yeah. It's just our word. The political bankers in New York, when they tried to kill the free banking, they called the free banks, they called them Wildcats. So they do what they want. They don't have the gold. They are just, it's just uneducated people. We are in New York, we are, Okay,
Yeah.
so they call them Wildcats. It's like plebs, plebs. We Bitcoiners call ourselves plebs for a reason, and
Yes.
we call the credit means Wildcat for a reason. It's
Yeah.
a derogatory term.
It's a derogatory term, but you make it now positive in that sense. We're like, okay, let's use it for good, so to say.
It's kind of
But the last question that I have is really about this eCash, because I'm not familiar with eCash yet. I've heard about it a bunch of times, but you mentioned it as well. And where do they come in? Is it that you use the technology, or help me understand how this is sort of from a high level point of view? How do we understand this or have to understand
yeah.
this?
eCash has been around for a long time. It's invented by a guy called David Chaum in the 80s or so. He was a difficult person, seems like, one hears. So it never, maybe because of that, never, and he tried to exploit it commercially, not open source, not anyway, so it never came to much. And even Satoshi, when he invented Bitcoin, I mean, Bitcoin is a kind of eCash. And the big innovation was that he could prove ownership through the blockchain and avoid double spend. And there is already 2 projects in Bitcoin which are giving eCash a try, which is Cashew and Fedimint. You may have heard those names. So essentially what these things do, they are infinitely scalable methods to transfer value from one person to the other in a totally private, instant, and extremely cheap and simple way. It runs over a so-called mint, a mint which gives tokens and checks tokens. So if I pay you with a token of Mint Alpha, I have my token for Mint Alpha, I give it to you instantly. I can send it through Telegram, Signal, Matrix, Nostr, whatever. Then you would check back with the Mint Alpha, is this a correct piece of token? And if it's correct, then Mint will give you another token without knowing who paid you, which means it's non-censorable. It's ideal money, because censorable money is not a good idea.
Yes. And at what part of the entire BitCredit protocol chain would eCash be implemented? Would it be with the e-bills, or just
Now,
I
eCash is just the
understand?
technology. So this fractionalization
Yeah.
of the e-bill, essentially one fragment will be represented by an eCash token.
Yeah.
But we can't use the traditional Charmian eCash. We can't use Cashew. We can't use Fedimint, because these are all custodial, which we can't have in the use case which we need. It's fine for some use cases in communities. If a supermarket wants to have their own currency, that's all fine. But once we want to have a public money, it needs to be non-custodial. So that's what we are currently working on, just to make sure that the
Yes.
credit.
Because I was going to ask, because that's one thing I heard as well, that eCash, it is super private, it's super nice, it's super cheap. But one thing is it's custodial. And so there is a way to make it non-custodial, or you are still working on it and are sort of.
We're working on it. It's not easy, but we just had another round of let's say, rethinking some things, and we're getting pretty close.
Okay, interesting. Yeah, you're confident enough that you will make it. So that's very interesting. Hubertus, thanks a lot for refreshing our memory on this, and good luck with the protocol for sure. And I'm very happy to see how this, or very curious how this will be evolving. So thanks a lot for stopping by. Any last words?
No, thanks for your interest. Yeah, maybe if you want to help, I mean, this is an open source community project. Anybody can contribute. There is a GitHub on it where you can join. We are changing into a new proposal mode this month for people who have some ideas what could be done. Also in terms of interconnection with the other Bitcoin system, there's lots to be done, like with Lightning. And the whole interconnection part. Feel free to join and see if you like it.
Sounds very exciting. Thank you, Hubertus. And I will link to everything, and maybe we'll have to talk in the future again. Thanks.
Would be a pleasure. Bye, Pascal. Ciao.
Bye.